Hey Rod, my wife and I are considering buying a new home. What's the difference between a conventional and an FHA loan?
Hello and welcome to Ask the Lender. My name is Rod Ferrier and I am a licensed loan originator as well as a U.S. Navy veteran. Hey Mark, that is a great question. And to answer that, let's break down the 7 key differences between an FHA loan and a conventional loan. Key difference number 4 between an FHA loan and a conventional loan is the mortgage insurance. PMI stands for private mortgage insurance. So let's don't confuse this with your homeowner's insurance, which protects the home in the event of fire or flooding or hazard like that. Mortgage insurance simply protects the lender in the event that you default on the loan. The mortgage insurance on an FHA loan is going to be the same for everyone, regardless of your credit score. Whereas on a conventional loan, the higher your credit score, the lower your mortgage insurance payment is going to be. Now, on an FHA loan, the mortgage insurance is on that loan for the entire life of the loan. So if this is a 30-year fixed, it's going to be on the loan for all 30 years. On a conventional loan, however, that mortgage insurance will drop off by law once you reach 22% equity in your property. Now, you can call the lender at 20% equity and request that they do that. However, it is not mandatory that they drop the mortgage insurance. By law, it does drop off at 22% equity. Mark, that was a lot of information. Did that make sense to you?
Absolutely. And I appreciate you taking the time to share that with me.
If you have found this information helpful, do me a big favor and subscribe to my channel, as well as click that bell to get notified when I post more helpful content. If you or someone you know is looking to purchase a home, have them contact me at rodferrier.com.